In 2000, this crash was a stock market crash. This was a real estate and stock market crash. This is going to be bonds, real estate, and stocks. It's everything.
Author of the best-selling book, Guide to Investing in Gold and Silver, creator of the Hidden Secrets of Money video series, and founder of goldsilver.com, Mike Maloney is legendary in the precious metal space. While some question whether to follow the buy the dip strategy or sit on the sidelines while the markets play out, Mike Maloney doesn't pull punches in his forecast for the global economy and the US dollar. Here he discusses the almost everything bubble and analyzes the performance of the bond market, recent real estate prices, and how the traditional 60-40 portfolio is holding up in 2022. But to really dial up your investing profits, listen in as he reveals his prediction of exactly when he thinks the market will turn and what the catalyst will be.
I know that when they manipulate the currency, it causes problems with businesses and individuals, and nobody knows what is going on or how to keep up. Here is the US dollar, and this is the US dollar index. And we've got a peak here of 165 and then a valley of 72. And the percent change between these is just, it's mind-boggling. And now we've seen this sudden climb. I mean, this is a very fast climb in the dollar. This is Brent Johnson's dollar milkshake theory coming true. And, you know, when I heard about his theory, I think the dollar was at 100 or 98 or something like that, whenever he first came out with it. And I said, he's got a point. This is true. And he also said that there will come a time where the dollar and gold rise together. And I said, that is also true. Now, we're in a zone here where there really isn't any resistance until we get up to about 120. Now, technical analysis doesn't always work, but I have a feeling that we are headed there. And one of the things that can cause that is if they raise interest rates in November, coming up at the next meeting, if interest rates in the US go up, that attracts bond investors. It attracts currency from all over the world seeking the safe haven, what they consider a safe haven. They're deluded, basically, fooled into thinking the U.S. Treasuries are a safe haven asset. As the currency floods in, then this will rise. And that causes anything that is priced in U.S. dollars that they are buying in another country where their currency is falling. Those things are going up tremendously. So we have inflation in the U.S., but at the same time, this rising dollar, which isn't a rising dollar, it's a falling dollar, or there would not be inflation. People need to understand this. The dollar isn't really going up. It's not falling as fast as the other currencies. That is what's going on. But now we're in this weird, I've talked about indeflation for many years, and we're back into this weird situation. We have, retail prices, things in the consumer prices, grocery store, gasoline, all of that going up, while we're now seeing asset prices starting to deflate. So we've got deflation and inflation simultaneously. This is going to continue until the economy breaks and the Fed flips and pivots, or that's what a lot of people call it. Now, we've got all of these bubbles that they're enormous bubbles, and they're just starting to deflate. They have not burst yet. This is just the beginning, folks. So this is real estate being down over just the last 5 months here. It's down 16% in Oakland and about 15%. And mostly it's all of the bubbles that were developed that have started to deflate, but they have not yet burst, like I said, and they will. This is only the beginning of the pain. My friend, Ronnie Stofferle, he says that this is the fourth worst year in the last 322 years of bonds. So if you are a bond investor, this is what your performance looks like. So World Government Bond Index annual return. It's pretty tragic, but there's bonds and there's stocks. Well, we were in the almost everything bubble. Stocks and bonds and real estate are all they're just starting their deflation. The bubble hasn't completely burst yet. Dan Tapiero, he's recommending a little bit of allocation into cryptos. Now, I've got a much larger allocation than just 5%. Cryptos are my second largest allocation after precious metals. Precious metals are by far my largest allocation. They make me feel the safest. But if you take a look at this is a chart of 60% stocks and 40% bonds, which is like your standard, conservative, supposedly, over the long term, it's always going to give you a return. But this is the worst return in 100 years because bonds and the stock market are both going south together. And so what do you do when everything is going bad? I mean, the stock market has barely begun the burst of the bubble. I mean, you look at the size of the crash here in 2008, this is a logarithmic chart, and we are to about here. There's like 2/3 of it left to go or more. And I believe that is, I think it's going to be worse. I think we're going to end up down at these levels again. Who knows? In 2000, this crash was a stock market crash. This was a real estate and stock market crash. This is going to be bonds, stocks, and real estate. It's everything all together. We haven't had a bond market crash like this. Let's go back to Dan Tapiero's chart. 9 or 70 it looks like, and back in the 20s. So this is a rare event, but it's going, when they raise rates in November, that is where the economy will break.
Maloney goes on to directly address which precious metals he favors right now, what he's specifically doing in his portfolio, and gives details of the strategy he uses when premiums are sky high to acquire metals at the very best price. Hit the like, subscribe, and bell button to get immediate notification of tomorrow's video, where Michael Saylor reveals, in the best speech I've ever heard on Bitcoin, why Bitcoin is still so undervalued, how Bitcoin will skyrocket to new all-time highs, and why Bitcoin is the best chance we have to defeat tyranny.
Right now, we are being given a gift. This is a very rare gift. Right now, precious metals prices should be soaring, but they're not yet. So it's a gift to be able to get ready for what's coming. Japanese yen, the British pound, and the US dollar against gold. Gold being the measuring stick. We're going to see how well those currencies perform. Well, when we got to 1934 in the US dollar was devalued, and instead of being worth 1/20th of an ounce of gold, it was devalued to 1/35th of an ounce of gold. Then there was some chaos, and then we started the Bretton Woods system and the Japanese yen, look at that. And then we went on to this is when the Bretton Woods system went live and the pricing was established. And then we go into the global dollar standard, or the floating exchange rates. And you can see these currencies falling to these minuscule percentages of gold. And so where do you turn when everything else is going bad? The only places are gold and potentially cryptocurrencies, but cryptocurrencies are new and they're highly volatile, so we don't actually know how they're going to perform in all of this. I think they're going to perform well. That's the reason it's a large percentage of my portfolio. So this little pullback that we've had in gold, I give you this long-term chart to gain perspective here, because people think if it falls from 1800 down to 1664 that the world has ended. Well, it hasn't. This is just a gift. Silver probably won't fall as much. Look at how much trading happened in this range here, and we're sitting right on the top of all of that support right now. If you look at where this is now and the support that we have on silver and a little less support on gold, it wouldn't surprise me to see this shift. To me, silver is the bargain right now. But anybody that waits till something hits the fan, at that point, gold and silver become very, very difficult to get. We saw it back in 2008. It was very difficult to get. The spot price fell. But the price for physical, if you were trying to get coins and bars, went up. It didn't go down. And everybody was mad, thinking that, but the dealers have to source this from somewhere, and they're sourcing it from somebody that's willing to let go of it. Right now, the premiums on silver eagles is still sky high for some reason, and it's because it's a supply-demand issue. It isn't that there's, somebody able to hoard and capture all of this giant profit. That isn't it. The profits for precious metals dealers are razor thin, and they're always razor thin. Their costs go up during these periods of time. So this is the time for me. This is what I've been doing. When premiums on things like Silver Eagles and 100-ounce bars come down, I buy those then. When premiums are high on those, I won't touch those. I buy InstaVault. And you can convert over to those later if the premiums ever come down again, which I don't know if they will.
Check out yesterday's video where Bitcoin evangelist Dan Held reveals the secret concept that will be the difference between Bitcoin taking over the world or failing miserably.